Welcome to the Wednesday edition of Tech Stocks Daily, where we break down the latest buzz right from the NASDAQ. Today we're diving headfirst into Google's mesmerizing AI spectacle at I.O., revealing its game-changing plans in search and smartware, teasing investors with its visionary maneuvers. Snowflake dazzles with a whopping earnings surprise, setting the stage for a cloud-flavored growth fest as they welcome a new board member and solidify their future. Plus, Zoom keeps soaring, outshining earnings expectations and enhancing its fiscal forecast with a sprinkle of innovation magic. Whether you're an investor, a tech aficionado, or just along for the wild ride, we've got all the punchy insights and intriguing narratives unraveling at lightning speed. Let's get started. Ladies and gentlemen, hold on to your smart glasses. Google is making waves today, pulling out all the stops at its annual Google I.O. conference. That's right, the splashy showcase of innovation and tech wizardry has a focal guest, artificial intelligence, and it's getting more attention than a cat that just ate a lemon. First, let's dive into what got Wall Street all giddy. Alphabet, Google's parent company, saw its stock jump after showcasing a plethora of new AI products and advancements. The market, which has been anxiously side-eyeing Google's ability to defend its search crown amidst the AI parade, is finally breathing a sigh of relief. Google's unveiling of AI mode in search, the expansion into Android XR, and the new AI-powered agent for the Gemini app showcases the tech titan isn't just playing catch-up, it's priming to lead the charge. Alphabet's embrace of AI into its core offerings sounds like Cupid's arrow to investors. While fears loomed over Google's search empire being disrupted by shinier AI competitors like ChatGPT, today's announcement suggests Google may disrupt itself first. They're going all in, not only making their products smarter, but keeping investors on their toes about where Google's shooting its innovation arrows next. Google's not stopping at search. Behold, smart glasses are back. Baby. This time, thanks to a partnership with eyewear darlings Warby Parker, Google's Project Aura takes center stage. It's a redo on the company's earlier glass endeavor, but this time not only stylish but brimming with functionality, powered by Android XR and the Gemini AI assistant. Insiders suggest a price tag that won't make your wallet sob as much as Meta's or Samsung's alternatives. Even Sergey Brin couldn't resist diving back into the game, stepping out of retirement. And why wouldn't he? His past follies with Google Glass have transformed into platform amethyst, now guiding Gemini projects to merge AI with a reality decked out in futuristic eyewear. You saw Brin on stage sheepishly admitting, "Oops, I made a bunch of mistakes with Google Glass." But hey, third time's the charm, right? Google Meet joins the action too, unveiling real-time voice translation that translates your colloquium discourse on the fly into diverse languages, so Harry can tell Sally, "Je t'aime," and hear it back in Korean. Amidst this flurry of innovation, what's particularly engrossing is the underlying sentiment of vulnerability, perplexity. AI CEO Aravind Srinivas has been chiming the alarm bells, deliciously ironic as an ex-Googler, about Google's vulnerable underpinning, over-reliance on its high-margin search business. Yet as Google appears to sprint in the right direction, leveraging its substantial infrastructure to sidestep disruption, it's wonderful to witness the classic innovator's dilemma pivot into what might just become their crowning moment of reinvention. So folks, Google might just be setting up its chessboard for what looks like a game-changing checkmate. They're beefing up user experience, driving innovation in AI, and they haven't lost their eye on keeping things profitable. Google's AI Expo just might be the rally call they've been dying to sound, paving a solid road ahead that garners investors' affection and potentially sets up Alphabet for another wave of dominance in the Coliseum of tech titans. Hold on to your data clouds because Snowflake Inc. is bringing the heat to the earnings season party. The buzz surrounding Snowflake today is all about their spectacular first quarter earnings report, which has set both the company and its investors dancing in celebration. Let's break it down. Snowflake, the AI data cloud wonderkind, announced first quarter revenues of a jaw-dropping $1.4 billion, outpacing analyst predictions of $1.01 billion. They also reported adjusted earnings of 24 cents per share, leaving the 21-cent street forecast eating their digital dust. Zoom out for a broader look, and you'll see that this momentum reflects a 26% year-over-year growth for both total and product revenues. Not too shabby. Snowflake's commitment to its customers is a key storyline. It ended the quarter boasting a remarkable 606 customers, generating over $1 million in trailing 12-month product revenues each, plus an impressive $2.24 billion in cash reserves. Talk about a financial fortress. Additionally, their remaining performance obligations soared to $6.7 billion, indicating that the Snowflake juggernaut is showing no signs of slowing down. CEO Sridhar Ramaswamy is kind of like the maestro of a self-redefining orchestra, focusing on making the Snowflake platform as user-friendly and enterprise-ready as possible. He highlighted their mission of enabling businesses to fully realize their data potential, driven by strategic positioning across the full data lifecycle. Now, for you market-savvy folks ready to swoop in, Snowflake projects second quarter product revenue in the $1.035 billion to $1.04 billion range, marking a consistent 25% year-over-year growth expectation. Bullish, anyone? Investors are clearly excited too. Despite a tumultuous year, Snowflake shares are up nearly 32% just this last month. Bottom line, Analysts have slapped Snowflake with buy ratings left and right, accompanied by an optimistic price target, reaching even as high as 208.67 cents. Hold your horses, though. Not everything is flawless. The stock did see a dip post-report, trading around 181.04 cents, which could be attributed to the RSI indicating it was nearing overbought territory. Investors, consider yourselves forewarned. Beware potential pullbacks. One more tantalizing tidbit. Snowflake just welcomed tech veteran Bill Scannell to its board of directors. Looks like the Cloud Kingdom is expanding its castle and seeking wise counsel for what could be a thrilling ride ahead. To sum it all up, Snowflake isn't just cooling off after this earnings report. They're heating up, setting the stage for a year rich in tech achievements and tantalizing investor interest. It'll be interesting to watch how this agile company capitalizes on increasingly data-driven opportunities as it races through 2023. So, whether you're a seasoned investor or a tech news fan, you're going to want to stick around as this story continues to unfold. Hey tech enthusiasts, today we're zooming straight into the headlines with, you guessed it, Zoom Communications. So grab your favorite quarantine snack and let's break this down faster than you can say you're on mute. Zoom stock has taken an upbeat turn, and here's why. They just dropped their first quarter results for 2026, and it's looking shinier than the reflection off your laptop screen during a meeting. Zoom managed to beat the analyst earnings forecast by posting 143 cents per share, up from the street's estimate of $1.31. While the revenue figure matched analyst expectations at a whopping $1.17 billion, it's their outlook that's got everyone talking. Zoom isn't just resting on its laurels of stock thriving times. They're upping their fiscal 2026 adjusted EPS guidance from an earlier 5.34 cents, 5.37 range to a more robust 5.56, 5.59 cents. Let's play a quick round of more numbers, please. They've even nudged their revenue outlook for the year to a range of $4.8 billion to $4.81 billion. That might sound like tiny steps to us mere mortals, but in the world of high stakes and high returns, it's got the stock climbing by about 1.74% after hours. So while you're in PJ pants during a business call, Zoom's over here making moves in, let's imagine, billion-dollar sweatpants. Zoom CEO Eric S. Yuan sprinkled a bit of fairy dust on the numbers by highlighting the firm's AI-first innovation, customer experience improvement, and overall future-proofing mania. Companies are flocking to Zoom like it's the last Zoom background with a beach sunset. And in return, Zoom debuted several new products this past quarter, praying the gods of productivity keep blessing them. Zoom's also on a spending spree with shares worth $1.2 billion up for a buyback, an effort sure to make shareholders dance a merry fiscal jig. Given the economic waters are a bit choppy with macroeconomic twists and turns, Zoom's navigated it all like a steadfast ship in a teacup. Okay, enough of me yakking about Zoom's financial acrobatics. What's the conversation looking like down there in the comments? Are Zoom's projections music to your ears, or do you feel there's more Zoom could do in this ever-competitive tech haul? Do you see yourself investing in Zoom, or are you riding digital with a different horse? So, hit those comments, leave your thoughts, musings, and Zoom jokes. Let's magnify the narrative beyond my banter. Plus, what features do you think Zoom users most want that they haven't seen yet? Until we meet again across the pixels, stay optimized. All right, tech enthusiasts, grab your attention spans and a notepad. If we had to choose one stock from today's thrilling lineup to discuss, let's take a bigger bite into Snowflake, a primary player dancing in the AI-driven data clouds. Right now in Snowflake's earnings wonderland, you might be wondering if it's time to throw some investment snowballs or pack up your parkas. Based on today's sparkling earnings report, here's my take. Hold and potentially buy. Why? Let's break it down snowflake by snowflake. Snowflake smashed expectations in their recent earnings report, reporting higher than expected revenue and solid profit figures. A revenue figure of $1.04 billion, when analysts were peering into their crystal snow globes and seeing $1.01 billion is impressive. The year-over-year 26% growth indicates they've packed enough heat to keep their growth engine revving, regardless of harsh economic climates. The company's focus on optimizing its platform for user-friendliness and enabling data integration across its lifecycle gives it a sturdy narrative, not just among customers, but investors eager for robust growth stories. Oh, and their $2.24 billion cash reserve is like a comfy thermal blanket in icy financial times. Yet keep in mind, they're not a fairy tale fully written yet. Even though the share price saw a dip, possibly due to technical market indicators, the RSI suggests a potential pullback as the stock edged toward being overbought. But let's not forget, Snowflake has buy ratings pouring in, and its long-term picture shows promise with continued growth in cloud computing and data analytics spaces. The addition of the veteran Bill Scannell to its board of directors also bodes well for strategic acumen, marking solid steps for sustainable growth in the evolving digital realm. Is it all snowfall and sunshine? Not entirely. Markets can be tricksy hobbits just as much as reliable sleds. Therefore, while the current rally and report shine brightly, each investor should weigh their portfolio needs, current valuations, and proceed with lent wisdom, not leverage. Snowflake offers substantial potential and is a hold on my scorecard because their fundamental strength and buzzworthy trajectory might just make future buy opportunities lucrative if fleeting dips arise. The takeaway here? Stay informed, vigilant, and ever ready to dance in the tech rain. This assessment is another piece of the puzzle, but it's key to do your due diligence, consult with financial advisors, and consider your investment objectives before dotting those I's and crossing those T's on your investment ledger. Keep your data cool and decisions even cooler. Now over to your thoughts. Is Snowflake's air too brisk, or does the stock fit your investment temperature? Let's hear it. So folks, as we wrap up today's whirlwind day on the NASDAQ, we've witnessed Google's AI-infused resurgence lighting up investor optimism, Snowflake's earnings turning heads with impressive figures and strategic growth, and Zoom's persistent march forward with solid projections and innovation developments. It's been a dynamic day, painting the hustle and progress in the tech realm, offering exciting opportunities alongside cautious investment narratives. If you enjoyed the quick dive and witty insights, don't forget to smash that like button, subscribe, and share this video with anyone who needs a splash of tech enthusiasm in their life. Trust us, tomorrow's tech tapestry will bring new threads of excitement and intrigue, so don't forget to tune in once again. Until then, keep those minds curious and your portfolios savvy.